one of your big losers this morning, down about 2%. But there are some big M&A deals which are back in the spotlight with the $2 billion Temasek-Manipal Hospital transaction that went through. But is there more in store in FY24 in the healthcare sector and beyond? Two experts are joining in the M&A space. We have Gopal Agrawal, who's the Managing Director and Head Investment Banking at Edelweiss, and Deepak Sharma, the Managing Director and Head M&A at Axis Capital. Gentlemen, morning to both of you, and thanks for taking the time out and speaking to our channel. Gopal, I want to start with you. Can you tell us what is the number of deals that you're expecting in this fiscal year? Because now the momentum has started to pick up again. And what kind of value are we looking at in FY24?
Well, thanks, first of all, for having me on the show, Sonia. Although if you look at the trends, maybe it's a bit negative, compared to, let's say, the H1 of last year, you saw much lower activity in H2. But personally, I do believe there will be a lot more action in the M&A in FY24 for primarily 2 or 3 reasons. So one, you are having lots of private equity sitting with lots of dry powder. So they would look at doing buyouts. You have lots of corporates, large conglomerates who are sitting with cash and capital on their side. So they would look to consolidate the market. So personally, I do believe there will be a lot more action in FY24 for us in the M&A space.
All right, Gopal, if you believe that there is going to be more amount of action, which sector would you think that there could be a more amount of action? I mean, we have seen the pharma healthcare space as well in the last 1 month or so. Suddenly it's come back to life. But any other sectors you're looking at, or do you expect more of the same in this space?
No, so you're right. I think pharma and healthcare has seen some bit of action. Beyond this, I do believe, sectors like renewable, especially solar, you would see action around EV. You would see action in also in US tech, where you will see a lot of consolidation again happening, wherein a lot of smaller companies, given the funding winter, they would get consolidated, wherein, some of the large guys who are backed by private equity would find them as an easy target and, probably would look at acquiring them. These are some of the sectors, which should see, I would say, a lot more action, in FY24.
Gentlemen, good morning. Deepak, coming to you, what is your own sense in terms of what we're likely to see this year?
Good morning. I think, as Gopal put it, there's clearly some positive sort of tailwinds coming through in terms of the corporate confidence and the way India is positioned in the global, financial ecosystem right now. All of those are positives. I think there are a few cautionary, counters as well. For example, the interest rates are going up. In terms of if we really look at what happened on the debt market changes and the fact that the mutual funds will have lesser debt pool to start investing, and given the way the acquisition financing in India happens, they were active participants there, so there could be implications coming out of that. Export oriented targets, there is a sense of caution coming through because things really haven't really played out fully in terms of the impact of the slowdown in US and the European market. So there is those export linked businesses where there will be a sense of caution. But net, I think there is going to be the transaction timelines are going to be longer. And one other thing which sort of favors M&A is the fact that public markets, are not at the frenzied pace they were last year or over the last couple of years. So there is more time for people to analyze and then take some informed calls. So all in all, in balance, I would presume, and then actually we are seeing that there's a lot of transaction dialogues on in the private markets. Deals are taking longer though because people need to be convinced on all these variables which seem to be increasing the volatility in the market.
Okay, and I guess deals are taking longer also because there's a lot of uncertainty, right, overall in the market as we are perhaps heading into a big recession. Gopal, that brings us to the question about how investors could fine-tune their playbook to invest into recession-resilient themes. How do you see it play out over the next 12 months?
So, again, when you talk about a global perspective, of course, there is maybe a recessionary pressure. But I personally don't see there's too much of that challenge, in India. It's a large market, one of the largest kind of, I would say, economy, which is, showing, even if one was to kind of look at some of the recent reports, we'll still be growing at anywhere between, let's say, 5.5% to 6% in terms of GDP. So I think, there are, I would say tons of sector, which would, act as a positive catalyst. And also look at it a little differently. A lot of PE nowadays are acting as a catalyst to support, let's say, the corporates or large conglomerate, which was not seen maybe, let's say, a couple of years back. So rather than, while they are doing enough and more buyouts on their own as well, they are supporting a lot of corporates, by funding them, who in turn are using that capital to acquire companies. So I would say, it's kind of a what you call good of both the worlds coming together, wherein you are using the experts of the corporates and capital from the private equity, which net would ensure that there's enough and more kind of a, let's say, win-win situation for both.
All right. If could you put a number to, what kind of M&A activity we could see this year? I mean, how much higher could it be than the last year?
I guess kind of anybody's guess, but my sense is that, let's say last year roughly it was around, around 100 billion M&A.
Yes.
Of course,
Yeah.
if you take out, the two large deal, which is the HDFC and HDFC Bank and L&T Mindtree, that itself was roughly around 60 billion. So I would say on a normalized case, we are more talking about a 40 to 50 billion kind of a number. My sense is that we should definitely look at, with the exception of any large deal, a good 20 to 30% kind of a stick in activities.
Got it. Okay. Just a quick point. I mean, we've seen, which specific sectors, Deepak? I mean, just to come to you, Gopal gave us those sectors where he thinks there will be deal activity. Which are the sectors, according to you, where despite some of the concerns you highlighted, higher interest rates, etc., which are ripe for activity taking place? Because valuations are also another thing, right? In private markets, they were completely out of whack a year ago, even 2 years ago, even more. And they've come down, although some would say they still have some more way to go. Your sense, which sectors are ripe for deal making?
So I think the demographic linked sectors, the consumer, the healthcare, those will continue to see momentum. There's no question on that. In the infra space, there's a lot of churning of capital that will start happening. Now that, the InvIT REIT story is, I would say, reasonably well established in the country. That is one space where, we believe that some of the larger platforms that have come through and which have gotten public acceptance and where the investors are already in the saddle, they will bulk up more and more. And that is a space which will see a lot more action. In terms of consolidation in the tech space, unlike the growth-linked investments which were happening earlier, this will be more consolidation now because there is bound to be a slowdown. And the slowdown, typically, the larger players actually get stronger as the vendor consolidation is happening. So that's another space where, things will happen. Some of the sectors like chemicals and API, which saw a lot of action in recent past, there may be a relative moderation there. But these sectors, all of these will continue to thrive in our view.
Gopal and Deepak, thanks very much, both of you, for joining us and giving us a picture of what the M&A scene may look like in 2023. Thank you very much. The market, by the way, for now is back in the green. We're up about 5 points.